What's up everyone, it's Scotty with MoneyVest. So in this video, I'm going to be going over three companies. So we're going to be talking about the next $3 trillion opportunity. As NVIDIA has already crossed over 3.3 trillion, Microsoft and Apple are already trading well over $3 trillion. So combined, these three companies are worth almost $10 trillion. I wanted to break down which company among the rest of the FANG stocks is going to make its way up to almost $3 trillion. So hope you all enjoyed this video. I've got lots of data and a lot of value to share here in this video. Make sure that you subscribe to the channel and of course join our Discord and our Patreon if you want to, of course, access the entire MoneyVest platform. So we're going to be doing a beta launch on July 8th. And this right here is the entire platform which you can access. Again, take a look at our M-score, our MoneyVest metrics, the fundamental analysis, including analyst estimates, and of course the ratios, our discounted cash flow, and of course the discounted earnings multiple model as well. So a lot of that is going to be included with a 51% discount that you can access again with the link down below. Right now we're having a special price and you can lock that price in forever. So when it comes to individual stocks here, there's three obviously that are the closest to the $3 trillion market cap. Of course, every single one of them having different kind of upside potential because of their market cap, the current market cap and the target market cap. So this is the road to $3 trillion, as NVIDIA, Apple, and Microsoft already belong to the $3 trillion club. Which company is going to participate in the $3 trillion club over the long term? That's exactly what we're here to discuss. Now, it's possible that over the long term, all three of them, Amazon, Google, and Meta platforms, all three of them eventually make their way up to that $3 trillion mark. But the idea here, of course, is which company has the highest potential to get up there and the fastest potential to get up there as well. So Amazon right now is at $1.9 trillion market cap. And so in order for it to get to $3 trillion, it's going to have to increase by at least $1.1 trillion or a 57% upside. Google has the least amount of upside needed in order to get to $3 trillion. So obviously that would make the most obvious company here to look at. Only 38% potential upside needed in order for it to add $830 billion and get to $3 trillion, because right now it sits at just over $2.1 trillion. And Meta offering the most upside and the least likelihood of getting up to $3 trillion among these three companies, because they would need to more than double and go up by 136% or add $1.7 trillion in order to get to over $3 trillion here from the current market cap of $1.27 trillion. Now, let's just quickly do some analysis. And again, I've basically broken this down into this entire spreadsheet. So I plugged in a lot of numbers and I did a lot of research and analysis here on these three companies. So these are my findings basically in terms of the data. So highest revenue is going to be Amazon at over $500 billion. So if we're comparing these three companies, which all of them, there's some overlapping industries. Amazon is into advertising and cloud. Google is into cloud and advertising. Meta is into advertising. A lot of them are using artificial intelligence in different ways. So there's a lot of overlapping industries, but of course, every single one of them has specific niche to what they do. Meta, of course, being a social media company, Google being mostly in advertising and of course search, and again, Google Cloud. And Amazon being an e-commerce company with, of course, having arms in both AWS with Amazon Web Services, so cloud hosting, and of course, advertising as well. And advertising was one of the biggest reasons why I was very bullish on Amazon from the beginning, is because I do believe that Amazon has a lot of untapped potential for advertisers on their e-commerce platform and the logistics network that they're building. Google, of course, with the potential with Google Cloud and artificial intelligence, and of course, Bard being a huge success, and also the fact that it's, again, YouTube is growing, advertising is a big component, and Meta with artificial intelligence, with virtual reality, the metaverse, and of course their advertising business continues to be a very core of the business and being extremely strong. So when it comes to revenue and gross profit, Amazon takes the lead here. It's the highest at over $500 billion and $270 billion in terms of gross profit. When it comes to margins specifically, Meta takes the lead at highest gross margin, Meta at over 80%, highest operating income margin, once again, Meta at over 34%, highest net income margin, so highest bottom line profit margin at 29% for Meta, and highest free cash flow margins, once again, Meta at over 32%. Now, when it comes to profitability in terms of dollar terms, so which company is making the most amount of profit, it is Google. So operating income, Google, 84 billion. Net income, Google, 73 billion. Free cash flows, Google at almost $70 billion. So In terms of top line revenue and gross profit and size and scale of the business, Amazon takes the lead. In terms of profit, absolute profit in terms of dollar terms, Google takes the lead. And in terms of efficiency, in terms of margins, Meta takes the lead. So I've basically broken it down: high growth, size and scale, Amazon; most profitable, Google; most efficient and high margin is Meta. So that's how these three companies kind of compare against each other. And this is going to be the breakdown, the full breakdown on a 10-year, 5-year, and 3-year basis. And of course, the margins for these companies that we're going to be taking a look at. And we also are going to look at our platform to really figure out what is going to be the expected earnings for the long term under the analyst estimates tab. In other words, you'll notice that EPS growth for Amazon over the next 5 to 10 years is anywhere between 28 to as much as 17%. And I've basically brought this, again, a platform for everyone to use. You can pretty much look at revenue growth and expected EPS growth as well for every single company, all the 17,000 stocks over in the US. So by 2031, we're looking at a 17% CAGR for Amazon. If you compare that to, let's say, Meta, if you come back over here, and now we're looking at Meta Platforms, fundamental analysis, analyst estimates, we're looking at a growth rate of just over 16% for Meta over the next 5 to 6 years. And for Google, it was also in and around that 17 to 18% mark. But really, if you come over to this spreadsheet, and if you take a look at the 10-year averages, the 5-year averages, and the 3-year averages for margins, it's very clear that Meta takes the lead across the board, Google coming in at a close second, and of course, Amazon profitability-wise is still struggling because margins are still nowhere near close to what Google or Meta could offer, simply because of the fact that it's an e-commerce business, and e-commerce business in general have low margins. Now, if you come over to the growth rates for revenue, gross profit, net profit, free cash flow, and shares outstanding, we're looking at Meta taking the lead for growth rates over the last 10 years for revenue and gross profit. But when it comes to net profit and free cash flow, even though at a lower margin base, Amazon has a significantly higher growth rate for both net profit and free cash flows on a both 10-year and a 5-year basis. Especially on a 5-year basis, revenue is growing faster for Amazon, gross profit is growing faster for Amazon, and net profit is also growing faster for Amazon, but it's not happening over the last 3 years. The last 3 years, Google has really taken the lead here across the board because we're seeing revenue growth, gross profit growth, net profit growth, everything growing very, very substantially here. And free cash flow at 17.5%, a little bit lower than Meta's 23% over the last 3 years in terms of CAGR. And share buyback, Meta doing a lot more share buyback of 3% compared to Google's 2.5%. Now, what I've really noticed is that Meta has quickly become a little bit away from a growth company over to more of a slow growth company. And that's what I've noticed for Meta, because if you take a look at the 10-year numbers, it's either on the first or the second spot, right? It's either growing at a much faster rate compared to these two companies, fastest or second fastest, right? Because revenue, gross profit growing in the 30% range. You can see 32, 33, 38, 31. It's a very strong growth rate. And that number has now kind of come down to 16 to 20% on a 3-year basis. And 5-year basis was 19 to 20%. So it basically went from 32, 33% growth rate company down to 19 to 20% growth rate company, and then down to 16 to 10% growth rate company for revenue, gross profit, net profit, and free cash flow. The opposite has happened for Google. Not really the opposite, I should say, but it's been more maintained. It's been more stable for Google. I mean, it's gone from 17, 18% growth rate for revenue, profit, and it's gone up to 17.5, 19%, 24% for free cash flow, and it's now sitting in the 18 to 20% mark here for revenue, gross profit, and net profit growth rates. So it's been more or less stable for growth rates for Google. Meta has come down from its historical growth rates, and that's obvious because as numbers get bigger and bigger, it becomes more difficult for Meta to grow. For Google, though, it's been more stable. It's been maintained really well. And Amazon also has come down from its historical growth rates of well over 22, 29, 60% growth in net profit on a CAGR basis, 10-year basis. It's now come down to more stable 19, 23, 24% over the last 5 years, and now even lower in the 14 to 20 to 12% range for net profit growth for Amazon in the last 3 years. So the bottom line really is that Meta has the highest amount of potential to getting up to $3 trillion if it's able to continue to grow and get to the size and scale of Google or even Amazon for that matter, while maintaining the margins. Meta would by far be the easiest choice to getting up to $3 trillion faster than Amazon or Google, but it has to reignite that growth rate and really work with larger numbers because the margins are solid. Meta scores perfectly on the margins. Now imagine if Meta was doing over $500 billion in revenue, similar to what Amazon is doing. Meta would already be close to $3 trillion in market cap because of the higher margins. That's number one. Now, if Amazon wants to get up to that $3 trillion market cap, it needs to expand margins. I think revenue is not a problem. Gross profit's not a problem. The problem is the bottom line. There's a bottom line profit is the biggest problem. And that's, I think, where the focus is moving forward for Amazon, because for the longest time, Jeff Bezos really prioritized growth, revenue growth, of course, customer feedback being the core of the company's culture, but really, at the expense of profit. They've taken all money, they've reinvested back into the business. That's what they've done over the last 10 to 20 years. And I think under the new leadership, Andy Jassy, over the last couple of years, we've seen a little bit of a shift away from, revenue growth over to more profitability, especially coming from AWS, especially coming from, the likes of advertising. So if Amazon's able to increase its margins, I think Amazon would be able to get to that $3 trillion market much faster than any of these other two companies. And for Google, it just needs to do what it's doing at the moment. It doesn't really have, lot to go in terms of 100% increase. No, only a 30-35% increase, which is possible over the next, let's say, 12 to 18 months if Google can continue to simply grow at the rate at which they're growing. So over the last 3 years, again, 19 to 20% growth rate, very, very strong. If they're able to grow that 20%, even 20% growth in revenue, profit, net profit over the next year, a slight multiple expansion is going to get Google up to that $3 trillion market cap. So that's the upside potential. I believe Google is the pure pick here in terms of getting to that $3 trillion because it's got only a little bit of ground to cover. Amazon can get up there faster than Google because they're almost identical in terms of that market cap, 1.9 trillion for Amazon, Google 2.17 trillion. If Amazon can somehow manage to expand margins over the next 12 to 18 months, and that's going to be the focus moving forward for the company, then it's going to be a lot easier, much faster for them to get up to that $3 trillion market cap. For Meta, it's going to be a lot more challenging because yes, the margins are high, but the growth rates are diminishing a little bit for the company. It's starting to kind of grow at a much slower pace, but maybe that growth rate reignites with metaverse, virtual reality, the Oculus, everything that Meta is working on. So it's possible that numbers are going to increase revenue, gross profit wise, and the growth rate is going to start to reignite as well. Of course, some honorable mentions, Tesla. Tesla has potential to get up to not only $3 but $5 trillion over the long term, but we've talked about this in a more separate, more detailed video, so definitely do check that out if you haven't already. But my pick from top to bottom, eventually, as I said, all three of them, I believe, are going to make their way up to $3 trillion in the long term. But my pick in order of likelihood of how I believe this is going to play out, Google gets to $3 trillion first. Amazon and Meta most likely are going to be at the same level eventually because Amazon could get up to 2.5, Meta could catch up to Amazon to 2.5, and then eventually it's going to be a race to the $3 trillion market cap. But I do believe Google is the clear answer here in terms of getting to that $3 trillion market cap with a 38% upside. Amazon and Meta coming in at a close second. We'll find out over the next 12 months or 18 months. And that's the crazy part. 18 months ago, even a $3 trillion market cap was something crazy to think about. And now we've got three companies that are already up there. And these three could be the next to getting up to that level. So let me know your thoughts down in the comment section below. What is your top pick in terms of the company that is going to make it to that $3 trillion club next? Let me know in the comment section below. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel. Happy investing, and I'll see you all in the next video.